Good morning, everyone. Thank you for joining us. As we are doing every Thursday from now on at 11 a.m. Pacific time, 30 minutes with Spyglass Lending. Today, a very special guest, a good friend of mine. I really appreciate him being here. Thank you very much. This is Josh Gorokhovsky from Telos Properties. And just to get into it, I'm going to give a little background on how we know each other and why I've invited him on. So let's start with it. Here we go. I think it was like 7 or 8 years ago, right, that we met? Does that sound about right?
When we first started chatting, maybe 2015. Yeah.
Okay, so 2015. So we're somewhere in the 7-year range. You were just a young Turk out of college working at Oracle on the up. You had a bright future of Nordstrom off-the-rack ties in front of you, and a lot of happy hours and jalapeno poppers where you were going to be a really good six-figure earner at Oracle or a large company like that. And you were like, hey, no, thank you. I want to be a real estate investor. That's what I want to do. And I will stop at nothing to make that happen and live that contrarian lifestyle. And at the time, I had Spyglass Lending up and running and doing a lot of private and hard money. And we met through a mutual acquaintance via hard money. We talked a lot about it, and we started working together for a little bit, trying to kind of cut our teeth together as real estate investors. I obviously had some experience prior to that with other partners in doing that, but I kind of wanted to build up at that time. And since then, whereas I have languished as a real estate investor, though I do have some good investments, certainly you have, let's just call it like it is, kicked butt. You're out there, you created your own company, and you're scaling up a pretty sizable portfolio. So does that sum it up? Does that break it down? Is there something more you want to add to that?
Yeah, no, that was a very humble intro. Yes, pretty much sums it up. Thank you.
Awesome. Well, tell us a little bit about it. Why don't you tell us about Telos Properties and what you have accomplished in the past, let's say 5 years, and what you're looking to do the next 5?
Yeah, so Los Angeles-based, development firm up to this point. Got into development not by choice, but kind of just because that was the flavor at the time that I got into, and that's where I could provide value to investors, and I kind of had those resources available to me through our mutual contact, right? So started out with one ground up duplex development, and which is right behind me actually. And from there kind of kept snowballing. 1 turned to 2 at a time, and 2 turned to 3 at a time. And now we have several, ground up development projects going on in LA. Also do some single family flips, ADUs and stuff like that whenever.
Wait, that's a hot button word right there. ADU. But I mean, for those listening who may not know the acronym, what is an ADU?
Additional dwelling unit. So in 2017 in California, it was passed that you could build additional units on single family zoned lots.
Why? Let's talk about why. Why was that passed? What's going on in our great state of California where the powers that be felt the need to pass such a law?
Well, obviously another hot button is the housing crisis, right? So they need more units. There's a lot of people coming into California at all times, and not enough housing. So that was something that they felt would be able to help solve that, right? Build units in the back, whether it's for renters or maybe in-laws, family members, whatever, so on and so forth. So that keeps evolving. Now you can build dwelling units on most lots and multifamily lots. So it's something that has definitely been a great program. And I think the last time I checked, which was maybe over a year ago, I don't know if the statistics have changed, but it was 67% of all building permits pulled in Los Angeles.
67. I mean, that is a massive amount. And as we know, right, I mean, the idea was streamline the process, right? They wanted to make it like Los Angeles Department of Building Safety was trying to rubber stamp those permits to get them through, as opposed to what, these other dwelling units or other types of buildings would take a long time to do, but the ADUs could otherwise go right through the process and be built pretty quickly. So that would help solve a lot of this, supposedly the housing crisis, obviously. And, once COVID hit, of course, things slowed down. There's just not enough people inside LADBS, and obviously not as easy access to get in and get all this stuff. But that's a great recap. So thank you for that. And you, like you said, you've built ADUs on property and flipped them as well. Is that right? Yeah. So you've added these ADUs and then made a profit selling them to end users.
Right.
Okay. And how many of those have you done?
I'm currently doing my third ADU project right now.
Okay.
And
But
yeah,
that's
I'm looking to do more. Yeah.
But for the most part, really what you've been doing is, as you mentioned, ground up construction, right? You're buying property, you're tearing down the existing structure and building quadplexes for the most part, right? And building that portfolio.
Correct. Yeah. Now with this new SB8 that was rolled out at the end of last year, which LA Building and Safety and Housing have just rolled out their adoption of about 2 weeks ago. So that might change, most likely will change the way that we're going to attack this point. Yeah. And
let's talk about that. Let's talk about that. Don't keep the listeners in the dark. How are you going to attack that? What is that? What's this new law? And how do you intend to attack it? And how is it affecting what you're doing?
So SB8 was a tightening of the existing SB 330, which was put into place to try and protect the affordable housing in the state. And developers were still finding loopholes and ways to get around that. So this SB8 was a tightening, and basically, summarized what it states is that if you are going to demolish a unit and going to build back, whatever you build back, you must replace that demolished unit or units with affordable units. So in my specific business model, if I'm demolishing a house and building 4 units, now one of those 4 units has to be for affordable housing, which, mathematically most of the time will end up killing the deal, right? You're not going to want to go through the risk and the time of building if your profit diminished.
Okay, well, let's dissect that for a second. So probably on a larger scale project, 20, 30, 40 units or more, X amount having to be affordable still pencils in the pro forma, right? But for your purposes, on only 4 units, if you've got to make one of those of the 4 affordable, you're saying it doesn't necessarily pencil or isn't going to pencil at all. Is that right?
Most of the time, it's probably not going to.
Okay, sorry, I just want to interject one more time on the idea of what is an affordable unit, meaning what's the threshold, right? Like what qualifies as affordable? Is there a percentage of what you can charge in rent, or is there an actual dollar number specifies affordable unit?
Everybody's trying to still wrap their head around it, myself included, but there is resources on the housing website, and there is an index of what you can charge per unit based on the amount of bedrooms. And then as far as like the tenants and how they qualify, I'm not entirely sure what they would need to provide to you, or if they would need to be part of any kind of government programs to qualify to be a tenant in an affordable unit. But there is an index where you're capped out on what you can charge for rent.
Okay. And of the projects you have built, these quadplexes, are they all quadplexes? Have you done duplexes and triplexes, or has it all been 4 units?
Yeah, we've done duplexes, triplexes, and fourplexes. Mostly it's been fourplexes, just because of the scale, right? Like you can get more income for the.
But tell us why you capped on fourplexes. Why? I mean, 2, 3, or 4 units. Why are you not going over the 4th unit?
Well, 1 to 4 is considered residential, right? And 5+ is commercial. So for financing,
now we're talking my language. This is all about the finance.
Exactly. Right? That's why I started with that, right?
Right.
So yeah, it's a ball game finance, which you're the expert on, and you can dive a little bit more into if you'd like. But as far as the construction, we're talking about a totally different form of construction. We're doing 2 duplexes, so there's usually not much, if any, structural steel in these projects. There's not advanced like fire sprinkler systems or elevators or anything like that usually come as part of requirements for commercial buildings. So from a construction standpoint, it's very simple. It's almost like building a house, just 4 of them. And it's quick, it's by right. You don't have to get any special entitlements or hearings. So for me, when I got started, and I didn't know the difference between a hammer and a screwdriver, that was the way that I could get into the ground up space.
Well, you use the term quick. What is quick? How long does it take, let's say, from not just purchase, but like actual demo, right? You get your permits ready to issue, bang, you're building, you're breaking ground the next day. What's it take to construct all 4 units, get the certificate of occupancy, and get a tenant in there? What's your time frame?
If we're crossing all our T's, dotting all our I's, and there's not much error, then it should take about 12 months from start to finish when you're breaking ground to getting, there's always little nuances. So it has taken up to like 14 months on some projects, but usually,
which still isn't bad, right? I mean, 14 months, yeah. Still, that's palatable. Yeah. Yeah.
So it's usually around there.
Okay. And then what, and because you're right, financing, and I'm going to circle back to that for a second, because this is, of course, 30 minutes of Spyglass lending. To your point, 1 to 4 residential, it is a lot easier for you, especially, and we're going to talk about the front end financing in just a moment, but on the back end, after you complete the project, when you need to refinance and keep it in portfolio, right? Like you have the tenants in place, you have the debt to income ratio set because the money is coming in, and that's what you need ultimately to get that long-term financing. You've purchased for X price, you've built for X price, now it's valued at Y price down the line, and you're going to get a loan at a certain amount, a certain loan to value ratio on that finalized price of what you've created. And it's a hell of a lot easier because it's 4 units or less than it is if you had to go above that, right? Because if you're above 4 units, it's a commercial loan. That's a very different animal. Although has become a lot easier, and especially since COVID hit, now that there are these debt service coverage ratio loans. I mean, it's pretty incredible that all of these lenders have jumped into that. First of all, do you know much about the DSCR loan?
Only the little bit I've heard from you, but not as much as I should.
But we can get into that. But going back, I mean, ultimately, why you've been doing 4 units or less, or why a lot of developers do 4 units or less, and then I want to talk a little bit about some of the lot sizes that you go for, or the zoning on the lots that you go for. But how are you financing the front end of the project? What are you doing there to purchase, to build, to hold for the 12 or 14 months it takes to build, and then ultimately, get the tenant in there before you get the final financing?
Yeah, I mean, these are larger projects than I would like to use, quote unquote, hard money for if I don't have to, which I have in the past. And they're not big enough to, go to a lot of these larger funds. So typically the way that I do it is I have my investors, whether it's 1 or 2 guys on these deals. And, again, the deals aren't so big where it's too much to bite off for a lot of my investors. So we'll get 1 or 2 guys. We'll usually buy the land cash. That way, while we're getting plans ready and entitled, not burning on the interest payments. So we'll usually buy cash. We'll get some of the soft costs, including plans, going with cash. And then in the meantime, while plans are being ready, we're going to go ahead and go to one of these institutional guys. Like we have a good relationship with First Republic, so we'll go to First Republic. They'll give us the construction loans, construction to perm. And I've done it other ways as well. I've done the hard money route where we get money for the construction through private money lender. And I've even I'm finishing up 2 projects right now where we did the entire project out of cash, no financing at all.
And let's talk about cash for a second, because this is a testament to you or any real estate investor. And I think anybody listening should understand what it is to really position yourself to go out there and raise capital like that, especially on a small balance project like this, right? You might be an operator, who can go, you're doing 100 units, 200 units somewhere in the Sun Belt, or building a gorgeous condo project in Utah for, high-end, big money skiers, whatever it may be. But here, just a simple 4 unit, like what it takes to go out there and create the relationships that you have and go raise that capital and convince others to say, come in with this project, showing them what their return of money is and why they should trust you. Why don't you talk a little bit about that?
Yeah, I mean, it's kind of just like anything else, right? Building up your pipeline and showing that you're credible and that you have a portfolio of what you're talking about, that, it's not just some pipe dream, that you've actually gone out there and done it. Obviously, right. On the first few deals, it was more investors taking a flyer and betting on the jockey rather than, seeing some kind of proof of concept. I mean,
Right.
I have been.
Let's call it. It's probably friends and family, right? Which is a great place to start.
Right,
I mean, that's
yes,
where
of
everybody should be
course.
starting with. Yeah.
Yeah. And I'm lucky, as I've mentioned on other podcasts, and to everybody, that I was just very lucky in the sense that I had somebody that was doing what I wanted to do. And when I was going to raise money, I was kind of like, hey, I got this guy watching over my shoulder, and as much as possible, making sure that I'm not fumbling. So it's just, a lot of networking, going to events, obviously, like I said, friends and family, pitching, getting rejections, sending out deals. It's like sales. You just got to keep going through it. And then the more you do, or that it becomes, the higher the demand comes from the investors, right? They see you've done it a few times, and now they're like, okay, I guess what you're saying is not 100%, just like taking a flyer.
Right. That makes sense. Okay. Circling back to the lots that you're looking for to build 2 or 3 or 4 units, what are you out there searching for, and how are you finding, or, how are you homing in on the properties that you ultimately want to develop and turn into these projects of yours?
So you're saying how am I sourcing the deals?
How are you sourcing, and then also what are you sourcing? Like, what are you looking for in a lot? Like, to build a 2, 3, or 4 unit, that's different than putting a single family house on a certain zone lot. So tell us a little bit about the zoning, and then ultimately how you're going after those specific lots that are zoned for the build of a 2 or 3 or 4 unit.
Yeah, I mean, typically what we're looking for is lots that are zoned R3, RD15, RD2. I mean, and I what all these mean, but that's a little more information I think people need. Basically, anything that says that the lot can be zoned for more units. Right. Okay. But then you also got to look at the size of the lot. So if it's zoned, where you can build 1 unit on every 1,500 square feet, but the lot's only, 4,000 feet. I mean, practically speaking, it's going to be hard to fit, even what you want to build there. Right. So you want to look for larger lots as well. And then as far as actually sourcing the deals, just relationships through agents that I've developed over the years, some door-to-door stuff that I was doing back in the day, not so much anymore, but still, whenever I can, drop in flyers, mailers. I'm starting a marketing campaign right now, and actually, I want
to hear that about that marketing campaign. But dropping flyers, I mean, again, this is a testament to you and what a good investor will do. I mean, you talk about door-to-door, so you were actually out there in the neighborhoods that you want, you've targeted, you sourced, and said, I'm actually the one, or hiring somebody, or you yourself were out there knocking on a door, dropping flyers. Is that right?
Well, yeah, I got that from you. I mean, back when we were starting, we were driving around looking for dilapidated houses, and yeah, I mean, like I said, I haven't had much time to do it so much lately.
You needed to, right? I mean, because once you become somebody of substance who does these, you start to attract other people who are just ultimately gonna, want to send you a deal, right? You start to get referrals, or those agents you just mentioned who might have access to or know something off market, or have the MLS listing, look at somebody like yourself and say, hey, this guy's done 6, 8, 10, 12 projects, whatever it may be. It's like that he gets it done. He really is going to do this.
And it's kind of been a little bit easier because my projects are in different areas. So when I'm at those projects, checking up on the progress, or meeting with the guys for whatever reason, I'm in the neighborhood all the time, and I end up talking to the neighbors very frequently. And I've actually bought quite a few properties just by being around and getting friendly with the neighbors.
Wait, let's not gloss over that either, because that's another big thing. I mean, anybody who's listening to this who says, I want to be a real estate investor, or, I want to dip my toe, whatever it may be. I mean, think about what you just said. You are there. You're on the site. You're checking with you guys. You're not just the armchair like sitting on your couch, making the call. Oh, I'll call my general contractor and let them run it. Or, I'm just sending over the lumber or whatever it is. Like, you're there checking in on it constantly. You have to really be a part of it. You're making the decisions, you're seeing what's going on, every few days, or even every day if necessary, right? And because of that, because you're there on site, that relationship happens. That conversation happens with the neighbor, or somebody is seeing what you're doing, wants to know who you are, and then, like you said, they've got a deal for you. That's really what you're talking about here?
Yeah. I mean, it's very organic. it's, just if you're there every day, you're bound to run into the neighbors, right? They're outside, they're watering their lawn, moving their car, whatever they're doing. And you just start a friendly conversation, and they obviously know that you bought the lot. And a lot of them in these areas that I'm buying, at least, are looking to cash out and retire. So it's happened quite a few times, just, like I said, organically.
Okay, now, you've made these purchases over the past few years, but of course, we all know this in the past 12, 18 months. Wow, has everything skyrocketed. I mean, even way more than anybody otherwise expected. And a lot of people thought, and I think some of the investors chomping at the bit when COVID first hit were like, oh yeah, prices are going to go down. This is definitely going to be a hit. And of course, it went the complete opposite way and rocket shipped the complete opposite way. So how are you dealing with that? Are you penciling in different numbers? And, by the way, and let's be at the same time, talk a little bit about the fact that not only have the prices of the properties gone up ridiculous, or sellers are saying, hey, you want my property, you're going to overpay for it, but the cost to build has gone up, right? I mean, we've seen lumber months ago skyrocket, then plummet, then skyrocket again. And now, the report came out today, inflation, real numbers are at 7.5%. That is no joke. And that hits hard, right? For everybody just buying eggs to a developer like yourself. Oh, we may have lost you. You're frozen here for a second. We'll give you a second to hopefully unfreeze. And not sure if you heard all that, but we'll ask the question again. This is the fun part where I'm just kind of talking to a frozen screen now and hoping the Wi-Fi kicks back in wherever you are. So, but we'll give it another moment. Yeah. Come on, Josh. Come back to me. Break out the chargers here. Yes, no, maybe so. I'm not even sure if there's anything I could still do here. Press a button, do something else, regenerate. Let's try this screen. We'll try this screen. My limited production knowledge. Oh, yeah, you just dropped out. Well, I'm going to keep talking with the expectation that he's going to pop back into the studio here in just a moment, and we'll get him back to finish this up. We've got about 7 or 8 minutes left of the broadcast, and certainly want to fill the 30 minutes, and we're having a great conversation with Josh. So do not want to miss out on this. And obviously, I can see there's numbers here, so there's still some people with us. Appreciate that. But I guess I'll just talk a little bit in the filler. We are talking with Josh Gorokhovsky today of Telos Properties, and he is really giving us some great information about what it's like to be a real estate investor out there in Los Angeles, kind of on a small scale, right? I mean, that's just he's doing 2 and 3 unit. There he is again. So we're going to add him back to the stream. Gotcha.
Okay, sorry, my internet took a poop on me.
I see that, and you're back on your phone, right? That's what we're looking at here.
Yes.
So that's good. That looks even better. So hopefully that won't happen again. But how much of the last part of the questions did you hear? I mean, I kind of was running my mouth about the idea of not only is it hard to get property and the prices have gone up and the sellers are expecting, but the inflation has taken a hard hit on other developers and what the costs are to do the builds. Why don't you tell us a little bit about that and how you're combating that?
Yeah, I mean, obviously no secret that everything has been going up with inflation. But yeah, materials specifically and certain materials, and it changes by the week. So you kind of got to be flexible and just be willing to roll with the punches, like most businesses. I mean, when I'm underwriting, it's hard to predict, right? So I can't really predict the fluctuation in materials or labor or things like that. So I pretty much go based off my most recent project. I always bake in a contingency of a certain percentage of the total project. So that usually
has that contingency gone up because of what's happened, because of this, the price of skyrocketing equity, and because of the inflation? Are you baking that in a little higher?
Yeah.
Okay.
I've added a few points on the percentage of the contingency.
Yeah.
I mean, when I'm underwriting values, again, kind of same thing. I don't like to speculate and say that, in 2 years when I'm done with this project, it's going to be worth this much more because of these reasons. I kind of just look at what's going on now. I don't know if price is going to go up. Maybe they go up and they come back down by that time. So I'm kind of conservative in my underwriting in all regards, and may have left some money on the table doing that. But so far it's been, serving me well. So
Might have left money
I
on
have
the
a hard
table,
time
but not
speculating.
throwing money out the door, and that's just as important, if not more, right? What I mean,
Right.
okay, but what are your thoughts? I mean, do you have any sleepless nights thinking, "Holy cow, the crash is coming," and when it crashes, it's going to be worse than it was in '08, or less so, or you're not worried about a crash at all? What are your thoughts on that?
No, I don't worry about things that I can't control. I can kind of just focus in the moment and be diligent, right? I can keep track with what's going on in the world in the macro economy. I can try my best to, speculate what's going to happen in the next few months or the next year, maybe. But at the end of the day, nobody knows, right? Nobody has a crystal ball, and I have no idea what's going to happen. So all I can do is be agile, be ready to adapt. Like this SB8 thing that we just talked about in the beginning, right?
Mhm.
I mean, everybody in my space that does what I do, everybody was kind of blindsided by this and the intensity of the restrictions. We knew kind of something was coming out, but the intensity of it really just slapped a lot of people in the face. And the people that are going to lose are the ones that are going to sit there and cry about it. And the people that are going to win are the ones that are going to be able to pivot and keep going and, figure out some other model. So kind of same thing with, this downturn that inevitably will happen at some point, but whenever it happens, and we're going to have to pivot, readjust, and keep it moving.
Well, I'm gonna put you on the spot a little bit more about that, to the term, using that term pivoting, that you're gonna do that as well. So let's talk about your 3 or 5 year plan with the expectations of what has already transpired or what's coming down the pike for you. What are you looking for? I mean, what do you intend to do over the next, 36 months, 5 years?
So if you asked me this question a few months ago, it would have been to scale up the 4-unit business, continue to do that, maybe purchase another 7 to 10 this year, and grow that pipeline. Now, as we're continuing to wrap our head around these new regulations, I don't know exactly if that's still going to be the play. You can check in with me in a month or two, but if there's going to be some way around it, some kind of analysis that comes together where if we place the units in this way, or maybe have an ADU on top of the 4s, and that way that will be the affordable, if that works, whatever the case may be, then obviously we'll keep trying to grow that business. At the same time, I'm going to probably start ramping up a little more on the flips, the single family flips and the ADUs. And, as I grow and hopefully get some help internally, I'll try to free up a little more of my time and maybe start looking at other markets too. Whether it's multifamily syndication in other states or here in LA, and kind of just be agile and go wherever the river takes me.
Wherever that river takes you, get out that kayak, get a bigger life vest, because man, it's class 5 rapids coming down the pipe.
Grabbing my granola bars and I'm going.
Right, exactly. Like, make sure you got, you got them all. So, but let's talk about that, because you jump out with something that really perks my ears up. Other states, every investor's dream, right? Like, obviously what you want to do in your own backyard, but the idea that there's money in greener pastures. Have you sourced a few states? Are you looking at others already? Have you flown out anywhere and kind of checked the area?
Not really. I mean, besides our little El Paso escapade a few years ago, and
Yeah, that was good.
I've been spending a little bit of time in Austin. My girlfriend lives there, so while I'm out there trying to do a little bit of research and talking to agents, meeting with people out there. So the short answer is no. I haven't really devoted enough time to decide if I'm going to hone in on a few markets yet. But I mean, definitely going to go where there are going to be far less restrictions than California, where it's developer friendly, investor friendly, business friendly.
Private enterprise friendly. Are you?
Yes.
I guess I would ask, are you down on California because of that? I mean, have you felt like this state is just not giving me as a developer what I need to support you as a business owner or developer or real estate investor? And should California be better suited
Yes.
to help small and private enterprise?
Yes, I definitely feel like the middle child here. I definitely feel I'm not getting any love, and it's hard, but kind of like I alluded to a few minutes ago, it is what it is, and you can't sit there and cry about it. The market doesn't care about your feelings, right? And me writing letters and whining about it and calling whoever is not going to really change anything. So
I like to envision you sitting at your desk writing a letter to Gavin Newsom or your local councilman. All right, we're hitting our mark here. We're hitting our 30 minutes. Josh Gorokhovsky, if you want to follow him, follow his journey at Josh Gorokhovsky on all his social media and at Telos Properties. That's Telos Properties across social media. See what he's up to. And obviously Spyglass, same thing, at Spyglass Lending. Catch us across all social media that way. Thank you all for joining us today, and thank you to Josh Gorokhovsky for coming on and letting me grill you here. Any last remarks you want to say before we sign off?
No, thank you. Appreciate you having me on. Appreciate all your help and guidance over the years, and I will talk to you very soon.
Back at you, man. Thanks again. Talk to you.
All right. Bye.
Bye.